guys, welcome back. In today's video, we are talking about the AMC signal that the hedge funds have been dreading. Firstly, when we take a look at the movie slate for 2027, 2028, and 2029, it's going to be absolute fire. Big studios, big IP, packed theaters. AMC isn't betting on a quarter, it's positioning for years of demand. Patience, shareholders understand the timeline, theaters aren't dead, they are loading. So we have already seen how well throughout the last few years that the box office has been improving. More importantly, we've seen how well AMC has positioned themselves to benefit from the recovery of the box office. We also know one of the things that the hedge funds and market makers have been trying to do is obviously push AMC to bankruptcy. But AMC has survived, AMC has fought on, and we're not seeing any possibilities of bankruptcy anytime soon. And so with all of this, this is the biggest things that the shorts are worried about. We've always talked about there are only two ways for short sellers to win, for short sellers to get out of this whole situation. The first thing would be if every single retail investors, if every single ape, or at least 99% of apes sold their shares and it become a 99% institutional owned stock. That is the first way for these short sellers to get out. The second way would be if AMC were to be bankrupted and no longer listed on the market. So these are the two ways we talked about with how these short sellers can get out of this position. Now, when we talk about the first thing, is every retail investors, is every ape, or at least 99% of the apes going to leave AMC? Well, I don't personally think so. We've already held on for 5 years. I don't see for whatever reason that suddenly, again, absolutely no reason that 99% of the people decide to leave. So that's already out of the window. The second way, and this is the one that has more likelihood, a higher possibility. Now, this is still very, very low. But in comparison to 99% of the apes leaving, in my opinion, this is obviously higher, which is for AMC to go bankrupt. And that's what the shorts have been trying to do for the last few years, by stopping AMC's ability to raise money, by creating all of these false news on AMC, by trying to push people away from AMC. That's what they've been trying to do. But AMC has put themselves in an extremely good position. You can even see this year, box office of 2026 nicely picking up pace. No wonder even Netflix planned for more theatrical opportunities, and as CEO Adam recently said, we don't actually need the box office to recover all the way back to 2019 pre-COVID levels. Now, there are a few things you need to pick up from this. Firstly, we talked about how Netflix wanted to obviously come into this industry, talking about their recent acquisition in which they failed, but it doesn't take away from the fact that they tried because they realized the opportunity. Then we talk about how Netflix has been pairing up with AMC in order to get their shows out, to get a bigger reach. So the thesis that theater is going to die and that everyone's moving to online streaming, despite the fact the biggest online streaming giant has then gone to AMC to partner up, that already shows a lot. And now thirdly, to talk about CEO Adam saying we don't actually need the box office to recover all the way back to 2019 pre-COVID levels. This just goes on to talk about the efficiency that we were talking about earlier, about how AMC has obviously improved their operationals and the fact that they are able to make the same profit even with the fact that the box office isn't as high as previous years. Now, this is obviously still already good. The fact we don't need to see box office make a new high for us to make an even higher profit than previous years. But the box office is making a high. And so this is obviously the cherry on top. And this is how we're seeing how AMC is operating, how AMC is surviving, and more importantly, how AMC is thriving. And this is why we said this is the signal that hedge funds are, of course, dreading. You can also see AMC expects North American box office revenues to increase by approximately $500 million to over $1 billion in 2026 compared to 2025, driven by a strong film lineup and operational efficiency improvements. And so this just goes and solidifies our points earlier to what we talked about. And for anyone who's wondering about the fundamentals and future of AMC, this is what we've been paying attention to, is why they're trying to improve on their premium theaters, because not only does it bring in more revenue, but it's something that cuts operational costs, because we talked about how they're trying to stop and close down the theaters that are less operational or at least less profitable. Furthermore, because of all of these opportunities, And going back to what we talked about earlier about apes not leaving, you can see from this user, Johnny, keep this price low and I'll be at 450,000 shares by year end. But we know that won't happen. I break even at 319, short every round, and now have to face the toughest, most resilient people who ever unified on the market. So this is what I was talking about. Firstly, the community is extremely strong. We have been here for the last 5 years and will continue to do so until we achieve what we came out for. And that's why I said I don't believe that 99% of the apes will suddenly leave for no apparent reason whatsoever. Now, going on to this, there are other few points to take away, just like we talked about. Every single ape, with how many investors we've seen in AMC, every single ape only needs to own around 300 shares to own up the entirety of the float. And we're seeing users like this to have owned this many shares. And you can see from this user who owns 191,000 shares of AMC. And this is just 2 people that we're looking at out of the millions of AMC investors that are out there. So this is why I strongly believe that the float has been sold so many times over, and it's why I continuously go on about it. And it's also talking about the fact that a lot of people now have their positions at, of course, a very low price. You can see for this particular user to be at 319. Not to mention about all of these new synthetic shorts that are created at the $3 areas, at the $2 areas. So when we talk about how and why they try and prevent every time AMC goes up, even by the smallest amount, it's because even the fact that AMC goes up by the smallest amount would put these short sellers in a very, very bad position. You can also see people may think I hate the short/FUD influencers, but that is not true. I actually love having them. Their presence and persistence gives me hope. I have never seen a short squeeze that didn't include them. I would be more concerned if they didn't exist. And it's what we talked about with the media articles as well. For people who are saying that no one cares about AMC, for short sellers who claim that they have completely covered out AMC, we are constantly seeing news articles covering about AMC. Bear in mind, AMC is currently a company with a market cap of less than $1 billion, sitting around $600 to $700 million. And yet it's seeing so much articles than companies that are worth $50 billion, $100 billion. And it just goes on to beg the question, why are there so much media coverage about this? And that's because they're trying to make you guys leave AMC. They're trying to make you guys stay away from AMC. And it's something that we have always talked about. Going back to what we talked about earlier as well, with how every time AMC goes up the slightest, that the short sellers will be pressured. This is why we're seeing the off-exchange volume always spiking up every time we see something happen with AMC. You can see 77%, 40 minutes into trading. That just shows how ridiculous this is. Another big thing is that recently what we have seen is Citadel, who have been cut off by JP Morgan. And it looks like they're over leveraged on their shorts and facing liquidity pressure. And this is something that has happened in the past before. So we know the reasoning for when these types of things happen, what is the context behind it. And so it's why we're also seeing this off-exchange go crazy for AMC, is because they're facing liquidity pressure. But not only that, it's also because the stock market is looking like it's getting ready to crash. And silver and others are all going up. And it's just a combination of seeing these hedge funds losing money. When we take a look at the macro news, firstly, 200% margin requirements put on crude because of what's going on, because of the oil supply right now being cut off. We're seeing this. Then what we saw was silver going up in price at 97.5. We also saw gold surpass 5,400. There are so many things that are happening within the market right now that's obviously showing what is going on. And then on top of that, we have GameStop, which is being rumored with an eBay deal. Now, once again, this is a rumor. And in a span of 3 weeks, we have already seen so many different news about who GameStop is going to acquire. Now, we've talked about either GameStop is making one massive acquisition or they're making a multi-acquisition deals with different companies. And so, something like this is possible. Now, again, I want to highlight the fact that this is still a rumor and we've already seen so many of it. But this is just to make sure that everyone is obviously staying up to date with what's going on so that we can prepare ourselves for when things is actually happening. Now, another thing is just if you want to look into why GameStop is going to buy eBay, this is obviously the reason with what they are doing, with what eBay has done, and how it could obviously benefit one another. Take a quick look, pause the video, or take a look at this tweet if you like to. Again, it's a rumor, so I don't want to go too much into it. What I do want to cover is the fact that XRT, which is the ETF that includes AMC, that includes GME, it's been placed on the NYSE ratio threshold list once again. And it currently has a short interest of about 266%. Now, there's a clear reason for why we're seeing this short percentage go up as much as this. The reason is very simple, because it includes AMC and GME. We just talked about the acquisition news that GME is potentially going to do. And if this is true, it's obviously going to have a lot of pressure. We just talked about the 77% because we're seeing firms like Citadel who are facing liquidity pressure. So it's no surprise we're seeing this 266%. And just like what we talked about at the start, we are seeing the signal for why shorts are obviously worried. And you can even see here, Barclays is still showing GME at a 9 quadrillion market cap. No other company has this glitch, which is approximately $20 million per share. So what we can see is just how GME's market cap is extremely high, or at least it should be, along with AMC and potentially a few others as well. And it would then make sense to why we're seeing multiple hedge funds, not just Citadel, but multiple hedge funds, not only start to buy into AMC, cut their short positions off AMC. We're also looking at these margin requirements going up. It's because of things like this. Also, furthermore, earlier we talked about silver, we talked about gold. And when we talk about this, you obviously have to pay attention to Hycroft. Right now, we're seeing Hycroft facing extreme short pressure, despite the fact that the market is obviously showing that miners are benefiting from the current situation. We also are seeing the fact that you can see from here, from HYMC, who tweeted, the US imports 64% of silver. Why? Because there's a limited number of primary producing silver mines. And then bear in mind, right now, Hycroft has a massive allocation. And this is just to show the potential they have. If you want to go into this more, we're looking at Eric Sprott, who we talked about, whose biggest position is in Hycroft mining with $1.8 billion. Now, this just talks about the confidence he has, but it also talks about the potential there is. And he also believes that silver will be selling at 150 to 200 per ounce. And this just again goes on to talk about how Hycroft still has a long way to go as well. And then finally, recently we covered this quickly, which is talking about the blow up that has happened in the UK. And you can see this. And this is something I want to talk about because it's actually affecting Wall Street as well, which further goes on to what we talked about earlier with the margin call requirements. As always, none of this financial advice to do so class of consult. Make sure you do your own due diligence research, and I'll catch you guys next time.